Hey everybody, it's Maureen, your local lender with Rate, here with this week's Mortgage Minute. So today is Wednesday, August 5th, around 9 a.m., and it was another busy week for the markets. The biggest takeaway, well, it's that we're continuing to see signs that the job market is slowing down, and that is good news for mortgage interest rates. The biggest report this morning was the ADP employment report, which showed just 44,000 new jobs were created in July, which is well below the expected 70,000. Earlier this week, the JOLTS report that showed job openings declining in June, and workers are becoming less likely to voluntarily leave their jobs. Together, these reports paint a picture of a labor market that's cooling after remaining surprisingly resilient. And why does this matter? Well, remember, if the job market continues to soften, that then reduces the pressure on the Federal Reserve to raise interest rates. And in fact, today's weaker employment data helped mortgage bonds improve this morning, which is a positive sign for mortgage rates. Now, on the inflation front, we are also seeing encouraging news. The PCE report showed inflation continuing to move lower. Core inflation came in slightly better than expected, and real-time rent data also continues to point towards easing housing costs, both of which are positive developments. And we are also starting to see some positive geopolitical headlines developing in the Middle East that could put downward pressure on oil prices if the negotiations continue. Now, lower energy prices can help ease inflation, which would also be supportive of mortgage rates over time. So all good things happening here. Last week, yes, the Federal Reserve, they did leave rates unchanged, and they did make it very clear that future decisions are going to depend entirely on the incoming economic data. So this week's employment reports are going to be very important. All eyes are going to be on Friday's official jobs report, which is one of the most important reports each month. If it also shows the labor market continuing to cool, well, then mortgage rates could see additional improvement. But if hiring comes in much stronger than expected, well, then rates could move higher once again. So that is it for this week's Mortgage Minute, guys. I appreciate you tuning in. If you have any questions or you're looking to buy or refinance, please reach out to me. I'm more than happy to help. And then I look forward to seeing you all next week.